ahead. Now let's go across to the management at Symphony. They are now joining us. Of course, another company that gets impacted or gets directly, a word as far as their consumer demand is concerned. Nrupesh Shah, Executive Director at Symphony, is now with us. So when we just talk about the numbers, can you just tell us about the numbers? PAT has gone down 22%. What is essentially happening? Is raw material cost and price hike coming in with a lag?
Thanks for having me. So coming to financial year 21-22 as well as year before, essentially in domestic market, COVID and related lockdown really set in during summer, and summer is the season when consumer sales happens, and hence consumer sales was badly impacted, and that is reflected in the performance. As far as trade inventory is concerned, trade is also sitting on a large inventory. Despite that, for 9 months, which is the realistic view to be taken, 9 months as a whole, vis-a-vis 2021, there is a decent growth, not only in standalone numbers, but also on a console basis. Coming to raw material prices as well as logistic cost increase. Of course, as most of the industries have been impacted, there has been a massive impact of the input cost as well as logistic cost, and also some of the constraints. But despite that, whether for 9 months or for current quarter, on a consolidated basis, our gross profit margin percentage is in line with what it was in 2021 on account of variety of operational efficiency, some of the value engineering, selective price increase, etc. what we have taken. And on a consolidated basis, we expect to maintain the similar level of gross profit margin percentage. Coming to standalone gross profit margin percentage, of course it is lower, but partly because some of the sales is to subsidiaries and then to the overseas markets, and hence really the relevant picture and the figure is the consolidated profitability. And finally, intentionally we haven't taken the price hike, despite we are fully capable to take it at any time, but because of the spillover effect and to maintain the competitive pressure, as of now, we haven't yet taken any major price increase.
Right. So if you just tell us about the demand trends, going into, with this sort of a cold coming in, is it correct time to take a demand trend as to how people are preparing for the summer, or probably towards March end, you'll get a better picture?
No, certainly we will get a much better picture in the fag end of the March as well as beginning of April. But the important and the positive sign is, touchwood, third wave of COVID, that is the Omicron, set in, and it's at the fag end. Hopefully, we are not expecting any COVID-related issue in the summer. So that is the biggest blessing. And as long as summer is normal, we are very optimistic about the summer and then after the performance, and we expect our performance to be back in line with the pre-COVID era.
Right, Mr. Shah, this is Vinny joining in as well. I do want to ask you about your sourcing, procuring, because normally that's done in the month of November and December for consumer durable companies. So this time around, given that, there was such a high inflation in commodity costs, how has that overall impacted your raw material costing, especially with the summer season coming in? You did mention that you're capable of taking more price hikes, but is it higher, and could we expect a further margin contraction in Q4 then?
Henceforth, we don't expect any margin contraction. If at all down the line, there may be some margin improvement. As far as input costs are concerned, of course, they have gone up by almost 25 to 30%, in addition to increase in logistic costs substantially, not only domestic, but also internationally. Having said that, as I mentioned earlier, on account of operating efficiency, value engineering, new models which we introduce, and selected price increase on a consolidated basis, our gross profit margin percentage has not impacted even vis-a-vis 2021, and we expect that trend to continue. And still, if required, strategically at any time, we can take a price increase.
Okay, Mr. Shah, thank you so much for joining in with us on ET Now. It's a pleasure having you as always. So surely that was the management of Symphony for y'all saying no more margin contraction expected, and they're well placed to actually take price hikes if they require as well. So keep an eye out on Symphony going forward as well. But with that, we're going to actually slip into a short break.